Hello everyone, and welcome to the London Startup Conference 2022. Pleasure, thanks for coming. Yeah. So I've a quick question, okay? My name is Adam Fulham, founder of Startup Network Europe. I'm from Ireland, and I said in a recent conference, I love London. I love London because London has the greatest football team in the world. Fulham, okay? My name is Adam Fulham, I support Fulham. All my family support Arsenal for some reason, but you know, whatever. I love my family, but bad taste in football. So Fulham is my favorite team. Now, when I was 20 years old, I actually contacted Fulham Football Club. And I contacted them. So you'll see here, hotmail1992 at hotmail.com. I said, hi, my name is Adam Fulham, and I support Fulham because it's my last name. Can I have a discount because of my last name? And this is from 10 years ago, and hi Adam, thanks for your email. I'm really sorry, but there wouldn't be an additional discount for you as you share your surname with the club. So that's my favorite thing about London, I guess. And yeah, about Startup Network Europe, very briefly, we do two things. We do events. Not big events like 10,000 people, 60,000 people, but events with 200 people, 300 people, 400 people. And the right people, I guess, go to the events. People who have similar interests, people who can benefit one another. So we did a webinar last year, UK Startup Conference. So we had, some top people from the UK. Dutch Startup Conference, London Startup Meetup here a few months ago, London Product Conference last week. And these are some events that I will be doing in the coming months. I did two events last week, and this week I've been in Paris, Amsterdam, London, so it's pretty cool. And what I'm looking forward to the most, I'm actually going to Kiev to do the first ever European Startup Conference. So the idea of that event is actually to connect lots of Ukrainian startups with investors across the world. Now, Startup Network Europe, we also do communities. So I know it sounds really weird, but when you think of a professional community, you think of Slack or Telegram or Discord. Oh, it's WhatsApp. So we have a group in Ireland. It's extremely successful. We've got 500 people, but they're all founders. Not one of the people is a salesperson. They're all founders, and it's an incredible community. So I think in London we can do the same thing, 500, 1,000 people, whatever the WhatsApp limit is going to be within a few weeks. So I'm going to send you all an email about that group, and I think it's going to be really good. Startupnetwork.eu/London, that's how you do the application form. And I have a question. Who here is a founder? Oh, good. That's like a lot of people. Who here is an investor? Okay, so keep an eye. Yeah. All right. And who here is other? Yeah, it's like a website application form. So that I'm really happy with that. That's a really cool mix that we have here. So look, today is all about connecting. So if any investors kind of want to introduce themselves, let me know at the end of the event. We actually do have one opportunity, and I think Sarah, where are you now? You're going to talk about it very quickly. There you go.
Thank you very much. Hello, my name is Sarah, and I'm from a company called A Squared. We're based in Brighton, and we work with startups and scale-ups, and we've just launched the Impact Accelerator, and the first cohort is for up to 3 startups, basically giving you investment, mentorship, to help you kickstart your vision into reality. What you need to do is come and find me. I'll give you a QR code. There's an Eventbrite set up. We didn't have time to put it on the screens. Just come and find me, or I've got Ben here as well. The webinar, it's free, attend it, 10th of November, and then there's a 2-stage process after that. Hopefully I'll get to meet some of you. Thank you very much.
Yeah, cheers, thank you. Well, it's my time to go. I have to go to the big chill and network with people. So, Thomas, it's your turn. Thanks very much. Thomas from Transatlantic AI Exchange. Thank you.
Adam, thank you very much. My name is Thomas Neubert. I will, in a few minutes, introduce the panelists who are staying over there, who have greatly spent their time today to join us on the panel. 4 investors, and 2 experienced entrepreneurs. Let me talk for a minute about myself, as well as the Transatlantic AI exchange. So first of all, you may hear it, I have a little bit of an accent. I'm born and raised in Germany. And I got a job offer for 1 year to move to beautiful, awesome, exciting, competitive, expensive Silicon Valley, California. 3 months later, I knew exactly that I'm a startup entrepreneur mindset kind of a guy who likes nice weather. And I have been now living in Silicon Valley for 31 years. My parents still hope that I'm coming back to my little village. And I do this weekend on a visit, and then I go back to California. But kidding aside, I spent 15 years building startup companies, from PowerPoint all the way to IPO. I invested in a few startup companies myself over the last few years, 3 of them in AI. And I am not in the event business like Adam. I'm actually getting my paycheck from a small company called Intel. And the Transatlantic Exchange is something that I founded 2 years ago out of passion, pure passion. There was an interesting LinkedIn post that I created like 2 years ago or something. It was on the day when I was in Silicon Valley for 30 years. And I always had this date in mind, and I wrote a long post on LinkedIn, pretty much thanking every mentor that I had the pleasure to work with over 30 years. And I made a commitment in that scrolling post that it's time for me to give back to the startup community. And as a result, I 2 years ago started the Transatlantic AI Exchange as a hobby. And we are now roughly 20 months in business, and I'm probably 3 years ahead of what I had in mind. So it's growing exponentially. I appreciate everybody showing up tonight. I encourage you, and it's not just about all AI, although AI will be everywhere, like we use the word internet and electricity and water, but we are not there yet. There's a lot of education that's required. So, however, there's also the word transatlantic in that particular title. So I am trying to build an open platform where I like to bring the best people, VCs, incubators, SMB companies, startup entrepreneurs, research institutions, university professors, and government representatives to exchange knowledge so that we can help each other to build an ecosystem. As it relates to AI, I have to admit Europe as a whole is lagging behind if you look at China and if you look at the United States, but I see a lot of good stuff happening. So the reason why I'm here is, and I approached Adam when I was here in London with my son, who spent the summer at a college here in London, and he loved it, by the way, that I had the idea to create an event over here, and I teamed up with Adam, and then I invited the speakers to join us to talk about startups, AI, but not just AI in general. So if you look at the slide over here, I cannot see it right now, let me go over here. We have had 14 events. If you look at the Transatlantic AI Exchange website, every single event has been recorded, and you can watch it for free. And the funny thing is, each video is actually AI enabled. Now that sounds funny, but it's actually pretty cool. If you look at and click on this video, there's a menu that comes up, and you can type in a name of a speaker or a word that you are interested in, and it shows you the whole script of the 1 hour session, and it jumps you right to the video clip and to the script itself. It's pretty cool, pretty nifty. So normally we have around 150 plus people in our virtual session. They're normally all virtual because I want to bring a lot of international people together. This today is the very first physical event I've ever done. And there will be 2 more next week, but that's hybrid, so you can actually all dial into the 2 sessions that will take place, together with Adam, by the way, in Berlin and in Munich next week. We did a similar setup in March with literally 90 minutes, but 15 speakers. Now that sounds a lot. It's an interesting setup. A lot of people will talk about a lot of things, but like in 4 minutes, kind of a snippets. People seem to like it. It was so successful, we had over 1,100 people online in March with over 84 countries in one session. And that's why we are doing it again next week. So today, we are co-sponsored this event by the company Scytale, and somebody will talk at the end about it, and also by Intel Ignite. And I would like to spend a few seconds to talk about Intel Ignite, because the people either from Israel or Germany couldn't be here today. Before I do that, and now I'm talking to all the startups, all where the hands just went up. I made a commitment earlier in the year that if somebody, a founder, startup person, listens to 1 or 2 events from Transatlantic AI Exchange, and you like us and follow us on our website, until December 31st, I'm giving out 3 prizes worth $1,000, $500, and 4 hours of mentoring. And we are going to invite the winner for the $1,000 against travel expenses, and I will personally host that startup, whoever it may be, in Silicon Valley, if they choose to do so. And I will give them free mentoring with the TIKES experts in Silicon Valley, or if the winner is from over there, we can ship them over here to the UK or to Germany. We'll figure that out. So if any of the founders have interest to get the foot in the door of the Silicon Valley network, I can help you with that. Just do what I just said and follow the rules on that one. Upcoming events. Adam mentioned it before, that we have 2 other hybrid events next week. And then after that, I already have a few more in the pipeline. And again, because of Transatlantic AI Exchange, the next 2 are very much about artificial intelligence and models and how you apply it, and the Web 3.0 and the metaverse, things like that. So maybe very quickly, Intel Ignite. Intel Ignite is an incubation program that has been started by, his name goes by Zach. He is our VP and GM based out of Israel, and he did the same program before at Microsoft. He was also the managing director for Microsoft Ventures in Seattle. So he's now working for Intel, and he started this program, super successful in Tel Aviv. Afterwards, we opened an office in Munich. They just finished their badge this week. And we just opened an office in Boston. And we are planning at Intel Ignite to have a physical presence and office here in London in 2023. And if you look at the program, I have been listening to some of these batches. It is, I must say, it's an amazing program. Now, Intel, as an organization, made a goal to strongly support the developer community with a lot of programs, and also get back to closer to the startup community. And the Intel Ignite program is exactly that. It doesn't require an investment from Intel or Intel Capital. It is open to every founder out there. If you have an interest to participate in these batches, they're doing this online, and it's all over Europe. You can submit your application. There will be a review process. But what a founder or the startup company gets out of this program is amazing. And I'm talking as somebody who spent 15 years as a startup guy and spent 15 years, 16, 17 years in the corporate world. And I have to admit, I'm the first to raise my hand as an entrepreneurial founder. Dealing with a giant big company and getting in there and finding the path through an organization with business units and what have you is not easy. It is very complex, it takes a long time. And with this particular program, we are trying to make it easier to get connected to what's happening in the field, in the startup community, what are the trends, but at the same time, if there's one thing that a corporation like Intel or other big companies, they can offer, is expertise. deep expertise, PhD level engineering on every level, software, hardware, components, semiconductor devices, you name it. So behind the program is a massive amount of mentors from Intel and external, but also Intel, who are more than happy to help people, not just with creating, startup pitches and stuff. They go really deep into your product roadmap. They give you suggestions, what an Intel would think, and so on and so on. It's amazing. So if you look at the numbers here, we had 2,500 people, 2,500 startup companies evaluated between Munich and, I don't know if Boston already had a batch, but also Israel. They took 88 startups into the program. It's a multi-month program, and we as Intel employees, we need to be committed for X amount of time to, with whatever the expertise is, to help through the program. It doesn't cost anything. Again, no investment is required. It's just to help the startup community. And selfishly speaking, we want to learn from the ecosystem. We want to get closer to the startup community, because every single big corporation has recognized, with a fast-changing world, you cannot grow without having connections to the startup world. The startup world with the creativity is outpacing the big corporation. That's a fact. And we're trying to be part of it. Here's just an example of how the filtering process is for the startups who will then be accepted in the program. As you can see, a lot of leads come directly from VC recommendations, and then some miscellaneous. They fill in the application, there will be interviews, there will be selection day, and then by the end, 10 companies will be selected for a really deep white glove trading program. So with that, I would like to bring the speakers on stage, if I may. We have 5 incredible speakers, and I'm really, really grateful that they're spending the time tonight with us and sharing their wisdom. So first, I would like to get on stage Christina, if you wouldn't mind. Christina Franceskides from Lakestar. Please welcome. Thank you very much. Next one, we have Sam. Where's Sam? Sam is with OpenOcean, very established investor. Then we have Mason. Welcome, Mason. He is with IQ Capital. And then we have 2 successful founders. One is Travis with Termify. Thank you very much, Travis. And then we have Roy. He is with Vertis. There was another person, if you probably have seen a picture on the website, unfortunately, and he's based in London. Unfortunately, he literally 48 hours was called to go to his headquarters on the East Coast for some emergency meeting, and he had to excuse himself. So, with that, let me see what we have. I will leave this up for everybody, and then let me grab a seat, and we can open up the conversation. All right, and by the way, we have plenty of time. If there is any questions, we normally, I think we reserved at the end around 10-15 minutes of questions. If it's okay with everybody and with the podium, if there is any related question from the audience to the question that we are trying to tackle, maybe raise your hand and ask or add to the particular question as well. Okay, let's get started. First of all, I would like to ask all the panelists to introduce themselves, talk a little bit about who you are and what you do, what your company does, what your fund does, and then maybe give a high-level overview of the fund and the company, and then we go into more detailed kind of questions. So with that, would you mind starting this? Oh, by the way, microphones. Minor details. And I think you have to share both. Here's one. Would you mind taking that out? Yeah, okay. So I think yours has an on and off switch, so be careful with that. Mine doesn't. I guess they don't think I have the highest IQ, but go from there. So please go ahead, introduce yourself, Francisca.
Hi everyone, I'm Christina. Lovely to meet you all. I work for a fund called Lakestar. So we're a pan-European fund. We invest in European founders building European startups. We are multi-stage, so we invest at all stages, basically, from seed all the way to growth. So we can write tickets anywhere up to £80 million, and really anything in between. So I think that's really important for founders, because we're one of the few investors in Europe that can really write those kind of tickets. We're also a generalist fund, but we're thesis-led. So we have 7 different thesis areas, from health tech, digitization, which is basically B2B, health tech, fintech, gaming, a number of different areas, and deep tech is one of those thesis areas that I focus on. Within deep tech, there's a couple of different areas we've been looking into, from quantum to space, so a real range. And we're very excited by kind of being able to look at all different types of companies. Then in terms of my background, I joined the fund fairly recently. I was actually a founder before myself, so I was a co-founder of a deep tech, neurotech startup, building non-invasive brain-computer interfaces. So we were basically building a new way of imaging the human brain to a much higher spatial and temporal resolution. It was a really cool experience. We raised money, we grew the team. So I've been on both sides of the table, and I think having that experience is really useful to now being on this side of the table and really being able to empathize with founders and understand the journey that they've gone through. But yeah, lovely to meet you all.
Sam?
Hi everyone, I hope you can hear me. Yes, my name's Sam. I'm a principal at OpenOcean. OpenOcean was founded by the creators of MySQL and MariaDB. So there's a lot of founders in here. I'm sure some of you are technical. It's probably the first database that anybody uses is MySQL. So we have a very prestigious background in open source and data infrastructure and things like that. I should say that we are based in Finland, actually. So I'm in the UK, obviously. We have a partner over here, but our roots are in Finland, in the Nordics. We, like Lakestar, invest across Europe, although we don't have the multi-stage like you have. So we just do Series A and seed, to be honest. So that can be a range anywhere, but say maybe €2 million to €5 million to lead a round. So to just give you a sort of ballpark. And in terms of where we invest, as I said, data infrastructure is key for us. That's mostly enterprise, of course, no consumer stuff. We also invest in quantum, some of the deep tech topics that were mentioned. We actually invested in IQN, if anyone knows them. They've just had the largest quantum round in Europe very recently. So yeah, open source is a big deal for us, but we invest in closed source stuff as well, but anything that's B2B and enterprise software generally. My background, I was basically a professional job hopper before I got this job a few years ago. So I graduated from Newcastle University doing computer science. I was a software engineer at JP Morgan straight out of school. Gave up software engineering for various reasons, wasn't very good at it to start with. And then I joined Uber when they were growing in the UK and launched Newcastle, Sunderland and various other cities in the UK as part of their operations team, doing absolutely everything, frankly. And then just before I joined OpenOcean, I was the director of customer experience at a company called Community Fibre, which is the largest fibre optic broadband network in London these days. So yeah, I've not founded a company, but I've been very early stage and been in scale-ups and things like that. So pretty broad background.
Hi everyone, can you hear me? Yep. Yeah. Nice to meet you all. My name is Mason. I'm a principal at IQ Capital. So we're a specialist deep tech venture capital firm based in Cambridge and in London. So we'll invest predominantly seed and Series A, but we have growth funds affiliated to that will continue to support the businesses. So initial checks of basically up to about $10 million. With further capital up to about 50 million for growth companies within our portfolios. So it's pretty broad. It's all deep tech focused. So we'll typically invest in quantum computing, space technology, AI, machine learning, medical technology, all of these sorts of things, software and hardware. So my background, originally electrical and computer engineer. So as an engineer and startup founder before becoming a VC, I ran a innovation unit with Innovate UK, the British government's innovation agency, before joining venture capital. I've worked at various funds around the UK, previously at Octopus Ventures, where we actually led the round into Christina's company, small world, and then most recently at IQ Capital, as I mentioned. Really great to meet you all, and looking forward to it.
Yep, this seems to work just fine. I'm Travis Toyna. I'm the founder and CEO of Thermify. Our tagline is a nice physics joke: we use energy twice. We're a new cloud competitor coming onto the market. The big difference is that we use our data centers to heat people's houses. So it's a new way of doing distributed computing. My background, I started in the data center world back in the mid-90s, doing internet back in the old days. Moved on to government contracts and stuff in the US, and then into web-scale computing in Silicon Valley. From there, I started doing consulting, moved to Berlin, was there for 6 years, and now I'm here in Wales, actually.
Hi, everyone. I'm Roy. So I've been an entrepreneur since 1999. So I'm long in the tooth. I started the .com here in London, and then moved to Silicon Valley. That company pivoted, lasted 10 years, became a cybersecurity company, and we sold that business to Cisco. So we leveraged data science in that business to try and identify threats and attack vectors over the internet. Then set up a second company, which was about 10 years ago, called Wandera, and we were also a cybersecurity company, again applying data science, this time to mobile threats, so attacks on people's mobile devices, and making Apple think that their OS isn't as secure as everybody says. And we did that for 10 years. We built up that business again here in Silicon Valley, and sold that business about 1.5 years ago. And now we're on to our third company, but it's not a cybersecurity company. Vertice is trying to use, again, data, which is an area that we have a lot of expertise in, to help companies optimize their tech stacks. So obviously, we all know tech's amazing and incredible productivity driver for businesses, but a lot of companies are buying a lot of technology. Some of it's redundant, some they don't use, and we use modeling to try and peer group, assess and tell people, you can optimize your stack this way, you can get more efficiencies this way, and your capital can last longer. So all of the 3 people that are here to throw money at you, will want you to try and extend the runway as much as possible, particularly in this kind of investment climate. So I don't really have a background of me, because everything I've been doing since 2 years after school is doing business. So that's it.
Thank you very much. I hope you all will agree that the expertise that we have here on the panelists is outstanding. It's incredible. And I always love the investors who actually have been on the other side as an entrepreneur. That makes it a really good investor, in my opinion, and a good mentor for the startups. Before I go into the first question, Adam earlier asked a question: who in this room is a founder entrepreneur? Can you raise the hands again, please, one more time? Because that is an amazing amount. Okay, thank you very much. Out of all of you, who is currently in a pre-seed fundraising mode? Pre-seed. Okay, who has already seed? Okay, A round? Interesting. B round? C round? I guess no IPO and M&A. Okay, got it. So it's very clear this is like the real crowd where real entrepreneurship and early stage actually is meeting here tonight to get some hopefully useful information from the panelists. So with that in mind, I would like to ask actually all of you, but probably a little bit more on the investment side. Looking what you just saw here, from the investment opportunity, what are you looking for from an investment opportunity for the next 6 to 12 months in regards to stages and in regards to technology and trends? Who would like to start? And then the founder's making notes, and then you know exactly whom to go for to get a check.
So I think the first thing worth noting is obviously the markets right now and the macro environment is very, very different now to how it was 6 months ago. So anyone who's saying that things haven't changed is just not true. I think there's a big difference now in terms of the way that we're looking at companies and the pace at which we're making investments. At Lakestar, we haven't stopped making investments. We're still very active, but the bar is much, much higher. So we're being very, very, we're really being quite thorough with what we're looking at and spending our time to get to know the founders and not rushing things. So I do think that kind of the last period of time has been not very representative of how the world should be. People were writing term sheets and doing deals in a very short amount of time without actually understanding the companies that they were investing into. So I think there is definitely a change of pace now. So that's the first thing to say. In terms of the areas that we're excited about, I can speak about deep tech in particular, which is the area that I'm focused on. I've been spending a lot of time into quantum, which I'm super excited about. I think it's a really cool area and one that we're seeing a lot of interesting stuff happen. It's obviously still very early, but we're seeing some really good signs that things are moving in the right direction. Within that, there's things like encryption, certain applications in life sciences. The applications within quantum are very far-reaching, so that's the first area. Quantum falls within our future of compute thesis. So that's all about the next generation of computing. Could be anything from new operating systems or even BCIs and things like that. The second area is novel AI. So for us, that's anything that's not applied AI. It's a novel type of AI. So things like deep generative models are very interesting to us, and anything that's kind of a new way of doing things. The third area is space. It's an area that we've been looking into quite a lot, where we already have an investment. We're doing another one now in Earth observation, which is very exciting. And then the fourth one is batteries and energy more generally. So they're kind of the first areas that we're looking into. But in terms of deep tech, the way we define deep tech is novel scientific and engineering breakthroughs. So really, it's a very broad scope. And for us, we look at many things. We do hardware as well, which is quite unique. Typically, if there's a software angle as well, that's more attractive to us. But I think people always forget that at the end of the day, especially at early stage, the most important thing is finding great founders and investing in people that have a real passion for what they're doing and can really sell to you why they're the best team and the best founders to be building a company in the market that they see as very exciting and growing and moving in the right direction. For me, the tech comes last. It's very important, but I think people always forget that the team is always the most important thing.
Christina, one follow-up question. Looking at the market right now, and it is tough for everybody, the big corporations, investors, startups, how long do you think this will last?
That's a very hard question. I think it will last a while. I think what will happen is that it will take time for people to get more comfortable. There is still money to deploy, and people seem to forget that as funds, we've raised money that we have to invest in, we have to find great founders. And I think that these types of environments, the best companies come through, so there's always opportunities, and it should never discourage anyone from starting a company or trying to go out to fundraise. But it is going to take, I mean, the advice we're giving to our portfolio companies is that they should be having runway for the next 2 to 3 years, because you just don't know how long it's going to take. And of course, you know, we've seen people having to cut headcount and really reorganize their businesses to make sure that they've got runway, because you just don't know how long it's going to last. So that's what I would say. The other thing is in terms of stage as well. So although we're a multi-stage fund, we can do investments from seed all the way to Series B, Series C. However, I think in the shorter term, I think there's going to be more of an interest in the earlier side of things as well, moving it a little bit earlier. I think the markets on the growth side have definitely dried up a lot more than the early side of things. So,
Great.
yeah, thanks.
Thank you. I would agree.
Actually, I don't think it's changed very much, actually, for us. Our process is still the same, and it's very rigorous. I mean, actually, if anything, it's just a bit different for us rather than, well, it's obviously different for the founders, but last year was a lot of pressure on VCs, as was mentioned, to do things very, very quickly. So I'd say that the most stark contrast is that things have gone back to a kind of normal timeline rather than very compressed timelines, often thanks to our friends in America who do things very, very quickly, which is a slight mentality difference. But so we haven't changed very much in our process. We're still looking at companies, we're still investing. It has been a bit slower, I would say, just in terms of the companies that I've seen personally. I think a lot of companies that don't need to raise are not raising right now, where perhaps they might have thought about it last year because they knew they could get a big valuation and just get a bit more cash on the balance sheet and get a bit more runway. I think most of our companies, if they don't need to raise this year, we're not telling them to raise this year. And it's a bit of a gamble because it might get worse next year perhaps, but to the point that was mentioned earlier, none of us are economists. We don't know what's going to happen in the next few years. So ultimately, stick to your plan, make sure you're growing as best as you can. That's about as best you can do and keep your head down. I think in terms of the focus areas for us, they also remain quite similar. We talk a lot about sort of vitamins and painkillers, and we always say you want to back painkillers and not vitamins, because when times get tough, particularly for companies and if the economic climate declines, they're going to cut the vitamins out before they cut the painkillers out, right? So, we invest in data infrastructure. This is generally things that are very sticky. When you start using them, they get in there. Snowflake's probably the golden example of data infrastructure. Huge net retention revenue. Once you start using it, you start using it more and more and more, and it's not something you're going to replace, overnight just because the macroclimate's declined a little bit. So we like to invest in things that are fundamental to companies operating. So I hope, time will tell, that what we invest in is sticky enough to get through a bad patch. And I think founders that are building data infrastructure and things that really enable companies to run are really powerful. Maybe just to name some things, because people might be founding companies in these areas. I mean, the areas that I'm personally interested in, of course, wider team have all their own interest in various parts of the market. I think WebAssembly is very exciting. I think some of the powerful applications we're seeing built with WebAssembly are really exciting. I mean, Figma is obviously the really prominent example there. I think passwordless is really starting to kick off now. Passkeys are really starting to be adopted, and I think that's very, very exciting. I think we're talking, we were founded by the MariaDB and MySQL team, but actually we've never invested actually in a database. I think vector databases are quite exciting because of the AI applications. And we actually use one internally because we built some machine learning enabled stuff internally. So we've seen that technology actually really help us. So, those are just a few things, but, we have very, again, we're thematically driven. So we try and find things on a big scale like data infrastructure and have a broad thesis in that area, but then we find things that we're specifically interested in. And we do what we call kind of like sub-theses, where we really dig in, we map the market. It should be enough companies in the space that we can map it almost globally, because we need to know what's happening in America, even if we don't invest there. So yeah, that's just a few comments on how we're operating at the moment. But it could get worse, could get better, but right now, if you're a good company, you can still raise. I think that's the long and the short of it. I've not seen anybody who's got a good company that's growing well and has a strong team that's struggling to raise. It's the middle ground companies that are struggling. So,
Thank you.
Yes, so as I mentioned, we're a specialist deep tech fund. So I think IQ Capital's one of the most established deep tech companies in Europe. Deep tech investors been investing in these kinds of technologies for about 30 years now. So our investment thesis, what we're looking for is over the next little while is early stage investments, seed and Series A. Our thesis isn't around a particular vertical, it's more technology driven. So the core thesis is sort of strong defensibility, strong technological differentiation, very difficult to replicate technologies, and we're a specialist in sort of helping founders to develop and commercialize these technologies from an early stage. So those as I mentioned, not a particular vertical, but I ran through some earlier. Quantum computing is an area of interest for us. Made a few investments there. Space technology, a lot of interesting things happening there. Sort of novel sensors, new kinds of data links, optical communications, all of these sorts of things. In the AI space, we're typically a little bit skeptical about kind of applied AI businesses and the need for AI in those applications. So we'd focus more on kind of foundational AI, sort of novel architectures, AI hardware, accelerator chips, photonics, all of these sorts of things. So we would typically be, technologies that have gone through sort of, spun out of universities based in strong research or expertise in a particular area that is just very difficult to replicate. So we'll also do medical technology, diagnostics, life sciences, AI, machine learning. So it's pretty broad, but all within the deep tech focus. I think I'm a little bit more optimistic about the market at the moment. I think particularly for deep tech for a couple of reasons. There's a lot of capital in the system, a lot of firms with kind of dry powder ready to invest. We haven't slowed down at all in terms of our investments that we're making. Deep tech's seen a massive amount of growth in the last few years, both from sort of government funding, money coming into private equity. There's a huge amount of capital available for businesses, so I wouldn't be deterred in any sense about that. I think deep tech companies as well, with their tend to have a sort of longer R&D cycles, a longer time to market, all of these sorts of things. So there is a bit of a delay that they're not directly affected by the macro environment other than the fundraising, right? So if you sort of in the lab and at an early stage, I know there was a lot of people here at sort of a seed stage. You can raise capital to give the company runway for the next 3 years. At which point, hopefully, the market conditions would have changed. But I think the capital available, both private and public money, we've never seen levels of capital this high in this sector before. So I'm a little bit more optimistic about the market conditions. Obviously, to your question of how long is that going to last, that's if we had a crystal ball, I'm sure our fund would have much better returns. But we don't know. But so it's obviously be optimistic, but kind of have a plan to be prudent, right? Don't spend unnecessarily, but don't halt your progress as a result of it either. But do bear in mind that you may be seeing lower valuations, all of these sorts of things. If you've recently raised capital, it may be in your interest to kind of delay a fundraise, for instance, if you're looking for a higher valuation. But my general advice would be not to let the macro environment deter you from what you're doing now, because you don't necessarily know what the market's going to be like in the future. So have your plan, have a prudent plan, and continue to execute according to that plan, and you will still be able to raise capital to finance your business. So just focus on your own business plan, and be cognizant, but don't be bogged down by the macroeconomic environment.
As an advisor, I would 100% agree what most of you just said. It's execute, create value, and do it fast but conservative, and just don't get distracted. So thank you very much. I like to use the same question, but I want to flip the table right now from an entrepreneurial CEO perspective. Maybe if you want, you can share who is your investor, how much money you have raised. But from your side of the table with the current environment, how do you deal with the current situation in regards to the macroeconomics? And what are your investors telling you what to do, or how do they guide you through this, tough times to come?
Yeah, so I think...
no, this is for the two. I mean, anybody can take it.
Have spoken enough.
But it's
entrepreneurs to get a word in edgeways. My God. So first of all, the background in terms of the fundraising. So across the 3 companies, we've done maybe 12 or 13 rounds. I was the one that was responsible for doing it. I haven't added it up, but we've raised maybe $200 million in capital. In this company, we timed it quite fortunately. So we raised 27 million. And we were a pre-seed, so we got in at a good time. And the question is, I guess, how do we navigate this climate? So I'm a bit old, so I've been through quite a few of these climates. We went through a dot-com crash in 2000, 2001, and we survived by the kind of skin of our teeth. We then had like the Lehman's thing, which kind of derailed an exit that we had, but we kind of, at that time, all of the investors were saying, you need to be very, very careful, but the market bounced much quicker than people thought. We had COVID, which hit my last company, which was a very scary time. So my view is of a few things. First of all, I don't think there's a standard blueprint. It depends the dynamics of your business, the characteristics of your business, the metrics of your business. I try not to listen too much to what the investors say, even though I've got incredible investors. So we have Bessemer and 83 North who led this round. We have individuals within those firms that have incredible track records and multiple huge successes, and they're veterans. But they also have, even though their interests are aligned 100% with us, they have a different approach. They have a diversified portfolio, and they've seen certain signals in the past they don't necessarily follow for now. So our dynamic is, in this climate, you cannot guarantee that you're going to have access to capital, which actually means that you have to build a better business that's more focused on fundamentals, that you focus more on things like unit economics, profitability, a lot of things that just went out the window in kind of previous years of hubris. So we though, look at the metrics, and if the business is growing and the unit economics are there, we continue to invest because we agree with what the investors are saying, that there is a lot of capital out there that's going to chase the right companies and the right businesses. But there's my main point here is there's no one size fits all. It all depends on your business. If it's growing slowly, you be very careful. You need to batten down the hatches and be very, very prudent and maximize your runway, because ultimately the overriding objective is to survive. So when we went through the dot-com crash, and literally we were like a death knell. Anytime we did a business development deal with any company, within 3 months they went bankrupt. Everything around us went terribly, and I had the worst day of my career, where I had to lay off 50% of our company in a single day, which is a horrific thing that happened to us and to those individuals. But we survived, and then we were there to fight another day. So I just think it depends on the dynamics of your business and where you are.
So before we move on, maybe as a follow-up, having the scars of the .com, and it was brutal. I mean, in Silicon Valley it was this, and then it just went free fall. What are some advice that you can give to all these founders here of what not to do? Don't panic, but maybe some of your experiences of what not to do under the current circumstances, or to become.
Well, I can tell you what not to do, but it's not the answer you're thinking of. Never take money from an ex-banker is my opinion, because they were our investors. It was Chase Capital. They followed the .com enthusiasm. They set up a fund. They put money in, and at the time, this is before Chase merged with JP Morgan. In 99, they had a $3.6 billion profit from their investment portfolio in things like my company. And then in 2000, when it all went badly, Chase had a $3.5 billion write-down. No money had changed hands. They didn't sell any of the companies in the year where they made profit, and they didn't have to lose any money in the year they made losses. But Chase went into the red. And so our investor wanted to kind of pull the plug and the edict from above was get out. And we had a real fun kind of negotiation with them. In the end, we kind of bought them out for a few cents on the dollar and survived. But it was a brutal experience. And we learned our lesson that only go with investors that are in it for the long run, that have reputations, track record, they have the heart of the founder in mind, and they're crucially there when the going gets tough. And it's very difficult at the outset of embarking on any of these relationships to know. I know, because I know what investors did when things went tough for us, and who stood by us, and who wanted to cut loose. But that's what I would say. And a lot of people are learning in this environment exactly why it's important to have deep-pocketed, loyal investors. So that's the lesson I learned. It's not what you wanted as an answer, but that's what happened.
No, actually, that's exactly what I wanted. I had no hidden agenda on the question. So, yeah, Travis, go ahead, please.
Mostly I was just saying that I second to everything that he said. Make sure that your connections with your investors are strong, that you have a real relationship with them to make sure that when the going gets tough, they're not going to turn tail and run.
So smart money and good money. Don't run after bad money. Okay, money is not money. For the entrepreneurs, one more question on this room. Besides being in a fundraising mode, which you always are. Are there anybody here in the room who have already raised some money but outside the UK? Or is it all within the UK? Okay, very few compared to, okay, thank you. Very few. On that topic, I would like to ask the panel here about the mindset of the investment community in the UK, in Europe, in Silicon Valley or the US, but also in Israel. Any messages that you can bring to the audience here, how they behave, how is the valuation, and so on and so on? Or have you cross-invested in other countries and vice versa?
Yeah, so we've made a few investments in the States as well, and I think that there are differences. I think one of the obvious ones is just the kind of size of the funds, right? So the venture capital funds, for instance, in Silicon Valley, much larger, much higher assets under management, and depending on their strategy, it could mean that they're kind of less price sensitive, right? So it's a much more competitive market out there, I'd say. So a lot of money chasing fewer deals. So the ultimate economic effect is that you can drive up valuations. Decisions probably get made a bit quicker. European venture capital, I'd say, is a bit more considered. But fundamentally, the things that everyone's looking for are the same. I think one of the key differences as well is kind of the US funds are very focused around kind of the storytelling, the vision, much more willing to kind of back people on a big vision rather than sort of fundamental, what are the metrics of your business, what is the technology and patents, these sorts of things. And not to say that isn't important here, right? But it is about selling your vision. But you might want to be a bit more quantitative, raising money in Europe with metrics, thought out plans, these sorts of things, alongside your big vision. I think those are a couple of the kind of heuristics I've kind of noticed.
Would a valuation of a startup company vary from region to region?
Within Europe or here versus?
Within Europe, but then the same company if they pitch to an Israeli VC based or Silicon Valley.
Yeah, so I'd say there's definitely an arbitrage there, right? So the companies in the US will raise at higher valuations, and I think it is just a function of the fund size, right? So if you were to raise with Sequoia or one of these funds where they might have a kind of very large multi-stage portfolio, and their strategy might be at an earlier stage to kind of just sort of get into a lot of deals relatively cheaply, and as a percentage of their fund, it's not a big loss, right? So it would be more price sensitive than a fund that's for instance, a bit smaller, that has to make more prudent investments because the amount of capital they have is limited. So I think it's just very fund dependent, right? But I'd say on aggregate, the valuations would be higher in America than they are in Europe.
Okay, thanks. Roy?
I just want to push back on that. The reason they put more money is because they have a bigger market and they grow bigger companies. That's the reason that the valuations are higher. And that's why they have bigger funds. So I don't think it's just a fund size function. But there's definitely an arbitrage. So we were here and we kept raising money from American investors, but that's a lot easier said than done because historically they much preferred you to be there.
Yeah.
And it was really easy. They had lots of amazing opportunities on the ground, so why invest in a European company? It's changing. Europe's getting much better. A lot of American investors have popped up here. I think for us, because we were in enterprise software and cyber, our big frustration in Europe historically was that there were very few specialist investors. when you're in Silicon Valley and you're raising money for your cyber company, you meet individuals that just invest in cyber companies. And they have like 10 of them, and they know everybody in that ecosystem. And the number of times we met with European investors who were generalist and asked us super basic questions about what we were doing. But it's really changed, and it's getting better and better, and the ecosystem here has grown, and there's so many successes and serial successes, and the investors have become much more sophisticated. So I think it's narrowing that gap. But there's no doubt that if you're, the hottest of the hot in Silicon Valley, you get the biggest multiple.
Yeah. Sam, Christina?
I would echo a lot of the comments that have been made. I mean, I guess my perspective is shaped from being on both sides of the table, and I can definitely say that when I was a founder, there was a huge difference between the questions that US investors were asking us and the questions that the Europeans were asking us. The US were a lot more visionary. They were a lot more thinking about, how big a company like ours could be, and really more, as Mason said, like thinking more about the vision and the scale of a company like ours. In comparison, the European investors were more focused on things like, okay, when are you going to start generating revenues, and how are you going to commercialize the technology? Even when some of these things were just too early for us to be thinking about. So I do think there's a huge difference in terms of mindset and risk-taking that is fundamental to the behaviors between the US and Europe generally. And I think Europe lags behind both the US and also China in many ways. And I think a lot of that also comes from some of the mindset differences and priorities coming out of universities. So European universities, I mean, although the UK, for example, has, I think, about 40% of the top 20 European universities are from the UK. Although we have like great research that's coming out of Europe, actually, I think a lot of people are encouraged to publish work rather than them create startups. And I think that's very different in the US. They're very much encouraged to, entrepreneurship is encouraged very early on. So it's a very different mindset from the outset, really, that I think is very important. Yeah.
Thank you. Sam, maybe?
Yeah, well, I think, maybe to play devil's advocate a little bit, I think it's all generalizations to a degree, right? I mean, I've met bankers that have become VCs who are incredibly good at the job. They got into it for a specific reason, right? Because they're interested in it, and most of them are pretty bright, and they can go away and read up on most of this stuff. So, I do understand. I think it is nice to have an operator background, and I mean, I guess I say that coming from something of an operator background. So, but it comes down to the individual. I think some people are just good at it, and some people are just not very good at it. And I think the great thing about this job, and one of the reasons I was very keen to do it, is because you live and you die on your track record. Of course, you have to be around for a time for that to play out, but ultimately it should be pretty meritocratic being a venture capitalist. So I think the ultimate fact is that culturally we have a less entrepreneurial culture here in Europe. I mean, I know when I was studying when I was a kid, it wasn't something that was discussed. The best thing you could do was go and get a good job. It wasn't about starting a company. I think that is changing. I went and visited my old university recently, and they're pushing entrepreneurialism left, right, and centre. And we actually have better universities for computer science. If you look at some of the numbers, I'm sure it could be argued, but if you look at the top 5 computer science schools in Europe, it's ETH Zurich, Cambridge, and Oxford. So they're 3 of the top 5. So I think we've got the talent. I think it's more like an ecosystem thing. Cambridge is a great example. Cambridge has Silicon Fen, it has IQ Capital, it has Amadeus, it has the Cambridge Angel Group, it has the university. So these clusters take a time to form. And the fact is we don't have many clusters at the moment. There's a great one in Munich around the technical university there. So they're forming, it's getting better, culture's changing a little bit. But yeah, so I think we're catching up. Actually, if you look at the numbers, I think it's something like US, obviously the absolute number's higher, but the relative growth, it's something like doubling the number of unicorns in the US, and it's 5x the number of unicorns in Europe. So it probably won't be sustained, but we're catching up on them, and that's why Sequoia's launched an office in the UK, and that's why we're seeing the US funds over here. Yes, there's a valuation thing they're playing into there, and they're coming here because we did have lower valuations, and we still do to a degree, but they're not stupid. They see that we're catching up.
Are the teams that you see, the founding teams, are they more centralized within the regions, or are they also like one from France and from Germany and one from the UK? Are they mixed now? Is it still very regional?
Do you mean like is one
startup?
All the founders together in one company? Are
Yeah.
they from different places? Largely not. I have met a company where the founders met online in a game, and one was in, I think, Switzerland, and one was in the UK, actually, and not in London, up in the northeast of England. So I think there's probably a younger generation where that might be more common. I don't see it very much. In actual fact, I think this is where the European concept doesn't work, because I think people look at the European Union and consider it a single country, or even Europe. It's not the same, right? We all speak different languages. We have very different.
Absolutely.
The regulatory frameworks are very different. We just invested in a company in Switzerland. In Switzerland, you have to go physically sign things in ink. This is kind of crazy. So, yeah, notaries is the thing. So yeah, it's not. I don't see it very often. I think probably, to be honest, I think the generation that grew up with the internet is probably going to do that more. But they're probably just about coming of age to start companies. I think.
Okay.
Just to add, actually,
Sure.
one important point, I think, is that one of the biggest differences between the US and Europe is, as you said, because of the lack of, the market is just much, much smaller in Europe, and so there isn't the exit opportunities in the US, and that's why they're willing to. The US have a different approach because they have the big outcomes there. They have potential acquirers of startups that they would be investing
Correct.
in. And the IPO market's very different. So I think that's one of the biggest differences as well.
Yeah, agree. Travis.
So to speak to this bluntly, when I started Thermify, I lived in Berlin. Now I live in Wales. My background is Silicon Valley. A lot of my contacts for my investors, the early stage investors, I have European investors, I have UK investors, and I have American investors. And I can say, without a doubt, the American investors higher valuation on it. It was much easier to get in the door. The American investors were much, much more interested in who the team was. They wanted to know the idea. They wanted to hear what it was that we were doing. But they were way more interested in speaking to everybody on the team. Who's going to be running this? Who's going to be sticking around? Who's just in for a pop and then they're going to be gone? Whereas the European and the UK founders, they didn't care. I mean, they cared about the team, but it was much, much more, all right, when are you going to hit your first sales? When are you going to hit 10x? When are you going to do this? What is your timeline? I want dates, times professionally. Like, is it going to be 12 p.m. or 1 p.m. on the 3rd, right? So the difference is massive in the relationship that you set up with the different investors. That said, some of my favorite investors are UK investors. Once we got in the door with them, once we got through that, they have been so supportive and there for us. So yeah, there's a big difference between the three regions, but it sort of comes out in the wash.
So when we had our one-on-ones and a group session prior in preparation to the session, I remember that particularly you striked me, and I made a note here, you have been, not just a little bit, you have been in Silicon Valley 10 years. And there's actually a saying, if you are for 7 years, there's something happening within the 7 year, then you... Okay. So 10 years Silicon Valley, 6 years in Berlin, now in the UK. Any wisdom, any cultural, the positives and the bad, the good and the ugly for the founders here that you can share?
I don't know if you can call it wisdom, but the old saying, the Mark Twain is the way that you experience things. Travel is what does it, and so yeah, I did 10 years in Silicon Valley, and then I moved to Europe to see what the culture was like there. It gets you outside. It gets you outside of your comfort zone. So being in the different places, you get to experience things. You get to talk to people. This sort of environment that we have here, this meeting tonight, is different than it would be in Europe, than it would be in San Francisco. He was saying that when you're in San Francisco, you have a cyber security company that you're doing, you go to a bar, there's 12 cybersecurity investors that are there because that's the bar that they hang out in. You know everybody there. You get to be part of that culture. In Berlin, it was the exact opposite. Everything's all mixed together. You're going to go to a place and you're going to meet somebody who's in quantum, someone who's in space, someone who's doing cybersecurity. All of that's going to be mixed together, and you're going to have to pick your part, where you're going. I'm still learning how things are here in the UK. I can't answer that. I've been here a year.
I think he was asking, where's the best beer? That's what he was asking.
It is not in America.
No, I have to agree on the beer in America. You will not find a Budweiser or Miller in my refrigerator. I buy good German wheat beer in the United States.
My lead engineer is here, and he's a big beer fanatic, and he loves his American beers, but I'm a German lager fan. So
here we go. Thank you. You made my day. Anybody else on the same topic? Yeah.
Yeah, a few things. I think just have fun as well. I think people take it so seriously, and of course it's a really stressful journey, but being a founder is one of the most incredible things you can do with your life. You're gonna learn so much about what it really takes to get something off the ground, how you go through fundraising, and it really, for me anyway, it really shaped me as a person, and I would never have changed anything for the world. So whatever you do with your journey, it's always worthwhile, that's for sure. I think also, in terms of fundraising, build relationships with investors early on. Especially with us, we love to build relationships with founders really early and get to know them over a period of time. So get to know people and start building up your network within investors, because it's a very small industry. We all talk amongst ourselves. We know who's raising, and we know who the good founders are typically. So I would definitely spend time building those relationships. And when you are fundraising and you've got a term sheet on the table, I would also do your due diligence on the investor themselves. We do our due diligence on founders, but I think sometimes it's taken for granted that it's a two-way street, and it's very important that you spend the time with the individuals who are going to be on the board and you really get to know them. A point was made earlier about when the going gets tough, and there are ways you can figure that out. Speak to other people that they've invested in and get to know them and understand how they've dealt with difficult situations, because people don't realize it's a very long-term relationship when you take money on from a fund, and especially from the person who's going to be on the board. It really changes the dynamics of the business and how you run things and who you're accountable to. So it's not a decision to be taken lightly, and you should definitely spend the time getting to know them.
Thank you. I was just told that we're actually 15 minutes behind schedule. I completely lost track. I just got the red card. Sorry for that. But maybe everybody else, just a quick wisdom for the audience from your own life experience that you can give to the founders.
Yeah, well, happy to follow up on that. To be honest, would probably come from my time as an operator, if you like. Probably trust your gut a little bit. I hired a lot of people at my last company because it was kind of a heavy service business. And the number of times I kind of defied my gut and said, I'll hire that person because it all looks good, but my gut's telling me something else. And I was always correct. The gut reaction is nearly always correct. So I'd just say, just generally follow your gut. It's weird what happens in your brain and tells you those things. Trust it. It will be probably most likely right.
Go ahead.
Yeah, I think for me it's, we've spoken a lot, new entrepreneurs, and you mentioned it earlier, just kind of take advice from people, right? So people have, VCs, experienced entrepreneurs have anecdotes and things that, can be useful and learn from them. Don't make the same mistakes as them. But also don't lose sight of, your individual company, right? Not everything's applicable to what you're doing. So, be clear about, what is the vision of your company? Why is that story unique? What makes sense for your business in this environment? Not to just sort of blindly take conventional wisdom and try apply it to your own business. Just be very focused on your own story, what you're trying to achieve, and that 9 times out of 10 is the correct path to go down. And like I said, take advice, but don't lose sight of your own vision.
So I've got 2 things to say. One, it's great to see so many founders here, and I'm a big fan of entrepreneurialism, but I also think entrepreneurship. I also think that you need to be very careful and make sure that it's the right thing for you, and really think about your capability set and your appetite for risk and whether it makes sense. So a lot of individuals can get a very rewarding and risky type of career by joining a startup that's growing and learning. You don't necessarily have to start as a founder, but if you do and you make that decision, don't give up.
I like that. That was a good one.
Yeah, that's it. Being a founder is not for the faint of heart.
Yeah.
It's, for sure. It's really rewarding, and I love it. But it's not easy. I did the early stage work for large corporations. It's really that you get a lot of excitement, but there's nothing in the world like running your own business. It's fantastic.
Okay, so with that, please stay. There's one more thing that we need to take care of. But before we do that, I would like to thank you, all of you, Christina, Sam, Mason, Travis, and Roy. This was awesome. I hope you got something out of this conversation. Thank you. We have one more announcement. We have one more opportunity. May I also quickly ask Miran? Where's Miran? Where is he? Oh, there he. Come over here. He's with Scytale. Scytale is one of the sponsors, and he would like to use the opportunity to tell you a little bit about Scytale. Before we do that, I don't know, Adam, if you want to say anything else, but right after this, across the street, 1 o'clock, we are going to mingle and have a good time with not German beer, but UK beer, which is good too. I had one yesterday, and I watched the soccer game. With that, it's all yours. Where's the clicker? Okay, so we just sit, if that's okay, and then you just go ahead. You take the mic.
All right. Hello, everyone. Nice to meet you. My name is Miran Galis. I came from Israel, actually from Dublin right now because there was a SaaS conference in Dublin. So I arrived today from Dublin and came from Tel Aviv. I live in Tel Aviv. And I'm going to speak in the next 10 minutes about compliance. And a little bit about myself before I'm going to start. I want to focus today on security compliance for SaaS. How many of you actually heard about security compliance? All right, nice. More than I thought. And how many of those think it's fun? Compliance is not fun, right? And I did it for 5 years. Actually, I did it for 5 years. I'm an ex-EY. I worked at Ernst & Young to Israel, and I audit security startups around the UK, around the United States, and around Israel. There are many startups also in Israel. And I think I haven't met a single person that actually likes compliance. So this is where I understand that compliance sucks, to be honest, but it doesn't have to be sucks. So I want to start and take you through and explain to you a little bit more, make you an expert for security compliance in 10 minutes, because I think it's going to be very important for your journey as entrepreneurs, as founders, for your startups. So every startup needs security compliance. But what is security compliance? Security compliance, this is any kind of certification, attestation report, framework, or regulation that you will be required to comply because you want to make sales, okay? Because the regulator decides so, or maybe because you try to sell and the customer just requires this. You need to be compliant. So every SaaS company needs compliant. And the first incentive for you to be compliant, it's because you want to close deals. Once you're going to start the company, you will want to penetrate, and someone said over here, I think you did, that try to grow fast. That was a great advice, try to go fast. But when you try to go fast, you will need to penetrate for new markets. If it's going to be in the UK, if it's going to be in the EU, if it's going to be in the United States, you will need to be in compliance with the relevant, anything that will be important for them. So what's going to be important for them? I'm going to take you through, but first, compliance is going to be expensive. Maybe I just jump on one thing. You want to close deals because you want to build trust, and eventually you want to boost growth. And the reason being you want to build trust is that you're going to find customers, which you're gonna take from them some kind of data or access privilege, which eventually you're going to increase their risk because you might be an attack factor for their company, and they have some other obligation, some legal obligation with their customers. So it's like a chain. So your customer's data is actually your customer's data, and your own data going to your vendor's data. So it's like a huge change that you need to manage. So how do you actually manage? How you can control? How you can build trust and make your future customer trust on what you have to do, what you sell actually. So as I think it was, I don't think it's Paul McCartney, former US Deputy Attorney General, said, if you think compliance is expensive, try non-compliance. And that's true, because compliance is expensive. It's also not fun, but it's expensive. But it doesn't have to be. And what is security and compliance when it comes for frameworks? So all of you, I don't know if all of you, but many of you are founders, raised pre-seed, seed, round A, maybe soon, and you want to start making sales, you want to sell maybe in the United States. So you need to understand what is your targeted market. If it's gonna be the United States, most likely you're going to need SOC 2. SOC 2, this is stands for Service Organization Control. This is an attestation report that an independent third party will come and check your company if you are secure. So in order to do that, someone from EY, like me, will come to your company and will sit with you the whole week and just gonna ask you billions of questions about your security, your policies, your procedures. I guarantee you're gonna like it. Most likely you want to kill him, but that's just the way it is. And eventually you will receive some kind of report which you can send to your customers and then sign those deals. If you're gonna sell in Europe over here, people more care about the ISO 27001. Now, if you're going to be in the payment industry or car holders, you need PCI DSS, healthcare high trust, HIPAA regulation in the United States. In the privacy GDPR, this is a regulation. It's not a standard. You can go to jail in some cases. You can get huge fines for violation of this kind of regulation. So you need to understand what's relevant to you when you start making sales in order to build the trust. And you're going to go through audits, and audits are, again, not really big fun. But you will understand that there are some better ways. You are already gonna do that. So at least take some value out of the process. Don't just check the box. I think in everything you do, you should never just check the box. Try to understand what value you can earn from it. And if you don't see the value, you should just delete it. You shouldn't do it. So try to see the value. Try to understand what's really important in the process, because actually, it's very important. When you're small, building processes and procedures, it's important because it doesn't exist. When you recruit a new employee in the United States and you're from the UK, if you didn't do any background check, you don't know the guy. It might cause you huge problems in the future if it's not gonna end up well. When you onboard someone, which access is going to receive? Is just gonna come to the next room and tell you, can you give me access? Or is it gonna be documented? So all of this stuff actually create risk in companies, and you need to take care. This is how it looks. So I hope you like Excels, because auditors just love working with Excels. So be prepared for it. There are some better methods, better ways to do this kind of security and compliance stuff. So brace yourself, because external audit is coming, and you need to be prepared. So security compliance, it's super time consuming. It can take 250 hours. And the last thing you want to do is to give your CTO waste his time on compliance instead of building the product and building the architecture and hire people. So work on that. Understand it's time consuming. You need to find a partner, or you need to strategize and plan ahead. Next thing, it's complicated. You are smart people, but you don't have time. So eventually it's amount of time you're going to invest in this process. And again, you need to grow fast. So think how you allocate your time. And eventually, all of my customers, when they come to me and telling me, look, I need to be SOC 2 compliant, I'm asking them, all right, when do you need it? Telling me yesterday. All right, so it's pretty tough. It's gonna take some time. You're not gonna get it tomorrow. We're gonna make it fast, and yet you need to understand. So understand right now in the initial stage which market are you going to focus. That should be part of your business plan. Afterward, yeah, basically sucks. It just emphasizes the message. All right, it's not fun, but it can be nice. It can be fun because you actually designed the company for growth. If you're starting it as 3 employees and you're gonna be 3 or 300, I have a company, I have a customer, they started as 50 employees, and in 1.5 years they became 1,500, working from 40 states. So that's a huge scale. That's crazy scale, actually. And they built good procedure. We supported their growth. So it doesn't have to be if you do this right. Understand what's relevant to you, find the value out of it, and you can do it correct. Now, the future of security and compliance. So for those of you that are not in the space of security compliance, IT audit, all of this kind of stuff, you need to understand that right now, this industry is pretty legacy. It's lagging behind. And why is that? That's mainly because auditors will come. You need to understand how it looks like. Auditors come to the company every single year, and they will audit the company and the effectiveness of controls over a period of time, and then they're gonna take some random samples. In other words, they're gonna ask you billions of files to send them from the HR, from security, from the R&D, from support, from legal, from actually 80% of the departments in the company. Then they're gonna test it, they're gonna see if it's, you've been in compliance. If not, they're gonna put a deviation, which might create a problem when you want to sign a contract with some enterprise. So you need to be prepared for that. And this is why we try to change, transforming the yearly based audit to continuous audit, automated continuous audit based on AI that just happened by itself. Think of that evidence collect themselves. Everything is centralized in one place. No more decentralized assets in different Google Drive, emails, on laptops of employees, stuff like that. And this is where this space is actually adding. Continuous audit every single minute, every single day. Actually reducing your time in 90%. And eventually you can focus on the critical stuff and not waste your time on the regular stuff that's not really that important. Second, compliance started with back in the days based on region and countries, like the United States, Europe, UK, South Africa, United Arab Emirates. It's continued based on industries, like the payments, the healthcare. Any different industry have their own compliance, and it's evolved. It's going to evolve also for technologies. Technologies based on blockchain, and decentralized Web3, autonomous cars. All of this needs compliance. Regulation always lagging behind technology, always. And this is a gap that we try to solve, but this is something that we're also going to see some change in the future. Some of this stuff regulation actually doesn't exist. If you think about the space, there is no regulation in the space regarding where every country in the world can put satellites. So might be soon that we will see some satellites just crash each other. And over there also, that there's gonna be some kind of regulation, so in the future. So on all of this stuff, you need to think and just plan ahead while you're in the initial stage. That's a great stage to understand exactly what you need to do. And that's also gonna be the future. You want to build trust. You want people, you want companies to trust you, mainly because they're gonna like your solution, but they don't trust you because you're too small and you're creating a big risk. So this is how you can just understand in the beginning what's important for you. And just 3 takeaways regarding compliance. First, understand which framework are relevant for your company. As I said, it's very dependent which regions in the world you want to sell. Second, identify and harness relevant stakeholders. Harnessing stakeholders make people believe in the project, in whatever you need to do. Just harness them, make them see the value. And third, prepare the team and give the right partner. Give them some guidance. Always try them to feel how it could be done better. I worked with companies that build really, really cool stuff because they need to go for some really boring processes, but it actually improved the company. I won't dive into technical stuff too much, but they built some really cool internal applications. So that's really nice. And just remember that one more thing. If you want, any one of you that want, I'm an entrepreneur, I'm a founder myself. I know it's tough, you need to be strong. I very much like that he said never give up. So really never give up. And because it's tough, and many times in the beginning, you need to grow fast and build in, we created some cool stuff free for startups. If you need any kind of guides, materials, stuff for how to do it yourself without spending any money, that's right here. And that's it. If anyone has any question, I would love to answer. Thank you very much, and let's go drink beer.
I think that is it. Thank you very much again for this amazing podium conversation. Are we going across the street for beer?
Yes, so we've got 100 people downstairs in the big chill. We're going to be another 200 people. Let's go upstairs. There's a lovely terrace, and the networking will happen, okay? Thanks, guys. We've got to leave now because there's another event at 8 p.m. Great event. Thank you so much for coming. Thanks to Thomas and all the panelists.